Hi guys, and welcome back to Simply Forex, the channel dedicated to you, the trader. We want you to be successful in the markets. So guys, I'm going to give you some gold every day. I'm going to let you know which currency pairs I'm looking to trade and which direction. And I'm also going to let you know which news that you must be aware of. So let's take a look at the chart and what I'm potentially going to trade today.
Traders, how the devil are you? I hope you're well. Today is Tuesday the 12th of July. And how was your trading day yesterday? Myself, hopefully we had another profitable day yesterday, guys. Yeah, so I hope you followed our Canadian dollar Swiss franc trade. If you did, you would have made money. Happy days. Also, note to self, don't do squats. I keep doing squats every week now, yes, and my legs are in agony again. Right guys, so let's not mess around, let's get straight to it. As always, we're going to look back at yesterday's trade, so Monday's trades. We're going to look at today's potential trades, and we're also going to look at the crazy world of news. So let's start with yesterday, guys. And we had two DOS potential trades. And the first one was this, guys. It was the Canadian dollar against the Swiss franc. And we were looking to buy this market. So why, I hear you ask? Well, this is why. So price was in a downtrend. Lower lows, lower highs, lower lows. Then just no higher highs, no lower lows. Just sideways action, guys, yeah? And then eventually, this zone here, yeah, we had this high and this high here, was eventually broken with this candle. Okay, so as soon as that candle formed, this daily bullish green candle formed, structure had changed. All right, we then had higher highs, and then also, guys, we had this bullish green candle as well. So the idea was just to come up to one of these grey zones and come back up to this blue higher time frame target here, guys. All right, guys. So yeah, that was the idea, and we made money on this trade. So let's look at the H1. So this always tells us how. Scratchy eyebrow. Okay, so we had the two grey zones mapped out. As you can see, this one down here never came into play, but this one here, yeah, as you can see, just kept bouncing off of this grey zone. Okay, so what candles could you have entered on? So I actually entered on this candle, guys. Okay, but I had to wait for a slight retrace because if you remember if you remember me saying, guys, from the other day, I placed my stop 5 pips below the last swing high, yeah, for certain pairs, and even 10 pips on more volatile pairs like pound New Zealand, pound Canadian dollar. But for this one, I place it 5 pips below because it doesn't move as quickly. All right, so this was the last swing low here, okay, and then obviously price bounced off of this swing low. Then I put my pips. What is wrong with me today, guys? I cannot speak. I haven't been drinking. And I put my stop 5 pips below. Okay, so if I remember rightly, it was around 26. It was around here that my stop was. Okay, I got a slight retrace. I entered here. My stop was here. Okay, so for me to get a risk to reward of 1:1, it has to go a little bit higher than the last H1 high. Okay, these last H1 highs. Okay, so I actually closed my trade around here at a risk to reward of 1:1. Okay, and then I'm still in this trade for 20%, guys. So we will see what happens. Okay, so yeah, let me just take all those pink lines away. So entered here, stop here, got out here. Yeah, for 80%. All right, and now I'm just going to leave 20% to run. Okay, and looking at the day chart, we still have room to the upside. Okay, and also you can see, guys, these wicks here. Yeah, you have to give your stop some wiggle room, I call it. Yeah, so my stop was here. And fortunately, it almost got taken out, but not quite. Okay, so you have to give the trade with regards to your stops and wiggle room. Okay, and as you can see, these almost touch my stop, not quite, and then come back up again. Okay, so yeah, this candle here was a good entry candle. Yeah, I mean, these candles here, guys, maybe you did get in on one of these, but these are just too doji-y, if there's such a word. They're dojis, all right? So, yeah, nothing there. But maybe you did, yeah, because they do have large wicks on the bottom, okay? But again, if you did, you could have took price back up to here, yeah, for a risk to reward of 1:1, roughly. Okay, so we made profit, guys, on the Canadian dollar Swiss franc long in this market. And I'm personally still in this for 20%. All right, but let me know how you trade it, guys. Yeah, I hope you made money too. Next trade idea was this. This was the pound against the Swiss franc. And we were looking to long this market. Okay, so let me explain why. So price was in a downtrend, lower lows, lower highs, lower lows, lower lows, lower highs, low, and it didn't create a lower low. Okay, and then eventually this high was taken out with this large green candle. Okay, so as soon as this high here is broken, we don't have a change in structure, we have higher highs. Okay, so we were trying to take longs from this candle. Okay, admittedly, I would like it to be a little bit more bullish and no wick at the top, but nonetheless, I still thought price would come back up to this blue line at least. Okay, and as you can see, guys, that didn't happen. But let's see in more detail what happened on the H1. All right, guys, so as I always tell you guys, yeah, the reason why we choose our direction is on the day chart. Why are we longing? Why are we shorting? And then the H1, we're looking for our entry. We're looking for criteria to enter the trade. Your day chart is why, your H1 is your criteria. Remember this. All right, so the idea was for price to come back to this grey zone, okay, which corresponded with this low and these highs, okay, and then we wanted to see a bullish candlestick pattern come off of this zone. And as you can see, guys, it just didn't happen. So our criteria wasn't met. Yeah, both of these candles are not telling me buyers are in control. And also with this red candle, yeah, it's broken this grey zone. Yeah, it's broken here. It's broken these last H1 lows as well. So for me, when I saw this red candle here, yeah, we had a H1 structure change. And that always makes me reluctant to start buying it. If the H1 is in a downward structure, I don't really want to buy it unless it makes good sense on the H4. Okay, but as you can see, we never got an entry candle. Our criteria wasn't met, and sure enough, price came down. Okay, there was this candle, guys. Once price come down to our second grey zone, there was this candle. Okay, which closed back into our grey zone and is a sort of bullish candlestick pattern, yeah. But I didn't take this because of the following. Let me show you this pair on the H4. All right, guys, so that, yeah, as you can see, we had the H4 candle close below the last H4 swing low, yeah. Once this large bearish red candle had broken the last H4 low, I am not interested. If anything, I expect this market to come lower. Okay, so yeah, for that reason, guys, I stayed out of the H1 candle. Let me show you again. For that reason, so this candle here, yeah, was the end of the H4. That's where it closed, and this is why I didn't enter on the next green candle. All right, guys, so yeah, just on pound Swiss franc, let me know how you traded it. But for me, our criteria wasn't met, so there were no setups for me to trade, guys. All right, so we stayed out of this pair, but made nice money so far on the Canadian dollar Swiss franc as we're still in that trade. Right, Let's take a look at today's trades now. Guys, we had another profitable day yesterday, so I hope you followed some of the trade ideas. But today is a new day. Guys, if you enjoyed the recap though, if you could please subscribe to the channel, smash that notification button, that would be greatly appreciated. And also smash that like button, help support the channel and come join us. Right, so for today guys, for Tuesday the 12th of July, we've got four potential trades, three of which are highly correlated. So the first one is this is the Canadian dollar against the Swiss franc. You're probably thinking, Tom, we've been long in this all week. Yes, we have, but I still think it has room to the upside, guys. All right, so I still think I've slightly adjusted my blue line. I've been slightly more conservative, but I still think we have room up to this 7,580 level. Okay, so the reasons for buying this market. So the why, remember the day chart is always which direction and why. So we are long in this market, and this is why. So price was in a downtrend, lower lows, lower highs. Then it just sort of went sideways, okay? And then eventually these last highs here, yeah, were broken with this bearish candle. As soon as this bearish, that is not bearish, that's bullish. As soon as this bullish candle was made, it broke these highs, guys. Okay, so we had a structure change. We had higher highs. And then for the last 2 days, guys, yeah, buyers are still in control. Yeah, there's nothing to tell me that price can't go a little bit higher. Okay, so we just want to carry on price up to this blue line, which I explained earlier. Okay, so yeah, we're looking to buy this market, guys. Let's look at H1 to see where we can enter. We can execute our trade. Okay, guys, so yeah, I've only got the one grey zone because if the H1 structure and these lows are broken, I am not interested. Okay, so we have to keep the H1 structure intact. Okay, so bearing that in mind, price can come down to here, yeah, test these last H1 lows. Okay, then we want to see a bullish candlestick pattern form. Excellent, we can then enter the trade. Our criteria is met. We get into the trade, we take price back up to this last high, we close 80% and then leave 20% to run up to our blue line. All right, guys, so Canadian Swiss franc, we're looking to buy this market. Next trade is this is the Aussie dollar against the US dollar. Okay, so we're seeing US dollar strength across the board, guys, but I'm just trying to choose the ones that give us the best setup. Okay, and we are looking to short this market, yeah, like I said, Aussie dollar strength. US dollar strength. Okay, so price is clearly in a downtrend, guys. Yeah, we got lower lows, lower highs, messed around at these lows, broke these lows. Okay, then we had lower highs, and then it broke these lows here again. Okay, with this large bearish candle. Okay, so because of this large bearish candle breaking these lows here, we just want to take price lower. And the idea is to get a retrace up into this grey zone and then take it back down to this psychological level of 600-700. Okay, and we've got a bit of room to move into. Not much. We do need a retrace, but yeah, once we get that, we can take it back down to the blue line. All right, so Aussie dollar, US dollar short. Next one, H1. Let's look at this. Remember, guys, the H1 is our criteria. Yeah, this tells us what we need to enter a trade. Okay, and this is what we need. Let me zoom out. My big head is always in the way. I apologize. Okay, so what we want to see, guys, is price come up into this grey zone. Okay, which corresponds with these lows here and also these H1 highs here. Okay, so I want to see a bearish candlestick pattern form at this grey zone. We can then enter the trade, and then we can take price back down to these last H1 lows, close 80% of the trade, and then leave 20% to run down to our higher time frame target, which is also very close. So depending on the size of this bearish candle stick pattern, you might just want to take 100% down to 600-700. Okay, but we're looking to short this pair. Again, guys, if it breaks out of this grey zone, I'm not interested in this trade. H1 structure's broken. This important level here is broken. Yeah, not interested. Okay. Right, guys, next one is this. This is the New Zealand dollar against the US dollar. All right, so all slightly similar scenarios, guys. But again, we're looking to short this pair. Okay, so day chart is your Y chart. So why? Because of this. Price is in a downtrend. Lower lows, lower highs. Yeah, creating some lower lows here, lower high, and then it's come down again. Okay, and again, we've got this bearish candlestick pattern that broke these last lows here. Okay, so for those reasons, that is our Y. And we just want to take price from this grey zone down to our higher time frame target. Okay, let me show you on the weekly chart what is our higher time frame target. Okay, so on the weekly chart, guys, just so you can see why I've plotted it here. So yeah, I've just plotted it down to this 600 level. Yeah, this is going to be a large psychological level. Okay, so this is our higher time frame target, this 600 level. Okay, let's look at H1. So remember, the day chart is the Y, the H1 is the what we need to enter, the criteria. Remember that setup, guys, it's important. If our criteria isn't met, we don't have a trade. If it is, wonderful, we can enter. Okay, but guys, we want to see price come up into this grey zone. Okay, which corresponds with this last H1 high and this H1 low. Okay, then we want to see a bearish candlestick pattern form. Okay, then we can enter the trade. We can take price back down to these last H1 lows here, close 80%, and then leave 20% to run, guys. Again, if price breaks out of this grey zone and H1 structure changes, I'm not interested, guys. Yeah, because I say I'm not, because a lot of the US dollar pairs are overbought or oversold. So if that H1 structure starts changing, it sets alarm bells ringing for me. So I'm not interested. Okay, but if it doesn't, yeah, we have a trade. Okay, so New Zealand dollar, US dollar. We're looking to short this pair. The fourth and final pair for today is this. This is the US dollar against the Swiss franc. Okay, and we are looking to buy this pair because of US dollar strength. Remember, guys, the last three pairs are all correlated, guys. Yeah, so trade the one that gives you the best setup. But guys, we are looking to buy this market for this reason, really. So price was in a downtrend, then in an uptrend, then in a downtrend, and now it's on its way up. So basically, guys, this is in a sideways market. Yeah, if you take these two zones here, yeah, it's in a sideways market. It's coming from here, up to here, down to here, and arguably up to here. Okay, but I don't think it will reach up to here again. And let me explain why, guys. Okay, so yeah, I'm happy to take longs off of this candle. Okay, because price is in a sideways market. But my higher time frame target is this blue line. Okay, so let me explain why. Why is it not this last high? Yeah, that would make perfect sense, wouldn't it, to have this as our target? But let's look at the weekly chart to explain why. And we're just in a sideways market, guys. But this area here, you can see, is a large area of resistance. Okay, so that is going to be my target. That is why this blue line here is my target. Okay, so what we'll do, guys, we'll just aim for the first part of this area of resistance. Okay, so that's why the blue line is my target, guys. All right, let's look at H1 now for our execution. And again, guys, if H1 structure breaks, I'm not interested. So again, we want to see price come back down to this grey zone, which is the last swing low on the H1. Then we want to see a bullish candlestick pattern form. Great, we can enter the chart, take price back up to these last H1 highs here. Okay, close 80% of the trade and then leave 20% to run. Okay, guys, so US dollar, Swiss franc, we're also looking to buy this pair as well. Okay, so they're the 4 trade ideas, guys. I just wanted to give you a look at a US dollar pair that I wasn't willing to trade. Okay, so this is the euro against the US dollar. So why was I not willing to trade this? So firstly, it's so oversold. Okay, yeah, it's so oversold, yeah, as you can see, guys, yeah, it's come all the way down here. So oversold. It's nowhere near the moving average 20, yeah, this yellow line here. And yeah, this parity, basically, this level here is when €1 is equal to $1. That is parity. Okay, so we are literally 20 pips away from that, and this could be such a big level for this pair. Okay, so we don't have enough room to move into before parity happens. Okay, it's overbought and it's miles away from the moving average 20. So for all of those reasons, guys, I would stay away from this pair. Okay, so instead, guys, I showed you the US dollar pairs that I would trade. Okay, guys, I digress. So those are the trade ideas, guys. Let's take a look at the news now. Guys, if you're enjoying this daily morning analysis and would like to receive it every single day, Monday to Friday, then please subscribe to the channel and smash that notification button, guys. That'd be much appreciated. Right, so news for today, guys. So Tuesday, the 12th of July. We've got nothing overnight, really, guys, of any importance. The first piece of big news that we're interested in is this. At 10 a.m. London GMT, we've got a 3-star rating coming out of the euro, and it's the economic sentiment of Germany. Okay, so this could really move the euro, guys. Must be aware of that. If we carry on down, as you can see, we've only got 2 other pieces of news that we're interested in. So at 5 o'clock London GMT, coming out of the US, we've got the short-term energy outlook. So this could move any US dollar pair, but potentially Canadian dollar pairs as well. And then at 6 o'clock London GMT, we've got the Bank of England governor speaking. He doesn't seem to stop speaking at the moment. Okay, but when he speaks, he can obviously move the pound, guys. Okay, so that's the news for today, guys. I hope you've enjoyed the vid. If you have, please subscribe, like, and share with your friends. That'll be greatly appreciated, and I'll see you tomorrow.